Folks, as you know, I am shopping for my next rental property in the Las Vegas Henderson area. And yes, I know inventory is up 77%. Yes, I know tourism is down 30%. Yes, I know transactions are down. Yes, I know inventory is up. But I know one thing for sure. This is the first buyer's market I have seen in over 12 years. And that means I have the power to set price, not the sellers. I'm excited for what's coming. But at the end of the day, there's only one guy I know that knows Vegas better than me, and that is this guy right here, Brian Lebo. How you doing, buddy?
I'm wonderful. How are you guys?
I'm doing well, man. So I've been talking about buying stuff, writing stupid, disrespectful offers in Vegas, and everybody's going, "You got to get Brian on. You got to get Brian on." I'm like, "Okay, fine, I'll get Brian on, guys. What the heck?" So why don't you tell me what's going on from Vegas in your perspective? Because it can be ugly for sure.
Okay, so like you alluded to, I've been doing real estate in Las Vegas for over 20 years, right? About 22 years. And this is definitely one of the most bizarre, nonsensical markets that I've ever engaged in. But just because it's nonsensical from an analytic standpoint, a statistical standpoint, doesn't mean that it doesn't make sense in the real world as far as motivation and practicality is concerned, right? Like, I'm a very analytical guy, but I'll be the first to tell you that the data doesn't match the actual narrative on the streets. So that's why I try to always explain and give context to all these statistics. So statistically speaking, inventory is double of what it was this time last year, which, look, economics, right? We only have two levers. We have supply and we have demand. That's all you got to work with, right? So theoretically, if supply doubles, means your prices are coming down unless demand goes through the roof, right? So right now, our inventory has doubled over where we were last year, but sales are down 40%. Now, what you're seeing coverage both locally and nationally is the surge in housing inventory, which you have to, real estate is regional, right? Like you always talk about your buyer's box, know your market. I don't care what the nation is doing unless that is affecting directly what's happening in my market. Okay. I don't care what happens in Atlanta. I don't care what happens in Tampa unless I see it as a precursor to what's happening here. So what people have to understand is this: just because inventory has doubled since last year doesn't mean it's the end of times necessarily. What you have to understand is we've doubled, but we're actually below the levels where we were in 2019 before the world went crazy. And the market was in great shape in 2019. So is it absurd that inventory has doubled, or is that just a metric? Now, to me, that's not really the concerning part, because even in a diminished sales, right now, sales are down 40%. That is disastrous, no matter how you choose to look at the metrics, right? That is the problem, is that demand is down 40%. No way around it. Even with sales down 40%, we only have about a 3.5 month supply of inventory. So on one hand, they say a balanced market is 6 months, right? So this, in theory, based on statistics, which I don't agree on the 6 months. I think you and I agree that's not relevant. But 3.5 months is not anything to just freak about.
Not horrible. Yeah.
Where you're freaking out is what homes are selling, what price segments are selling, where is the demand. That's where the nuance is. That's where the professionalism comes into play. So here's what's really happening in Las Vegas. I don't care about the metrics. I'll be the first person to say I don't care about this. Even with sales down 40%, inventory doubling, prices just reached their all-time high. The median is $485,000. Nationwide, we're at $436,000, I think, nationwide.
Yep.
Now, here's the difference between Vegas and some of the other areas that we're hearing about: Austin, Texas in general, Florida, Atlanta. Those areas had huge migration patterns, and those areas built homes to satisfy that migration pattern. Las Vegas pulled the least amount of permits in the 2010s of like pretty much damn near any decade. We didn't overgrow. So yes, we've doubled our inventory, but we have nothing, especially in new homes, like other parts of the country that are really, really suffering. That's part of the reason why you're seeing the median price go up, is because we don't have this massive flow of inventory. Having said that, here's what's happening. there's two types of homes in every neighborhood that seem to be the ones that are selling. Every neighborhood I pull, I shouldn't say every, but the majority of neighborhoods I pull, you'll see anywhere from 5 to 10 homes on the market. And usually there's one, maybe two. That seems to be more the norm. Not much is under contract. Now, when you look at the homes that are selling, it tends to be one of these two types. Either it's the cheapest home in the neighborhood, so it's either investor friendly, where they're like, hey, I can get into this neighborhood economically, or just in general, hey, I'm a buyer and I can afford to get into this better neighborhood with the cheapest home in there, and I'll take my time and fix up. Very practical. Or it's just the prototypical awesome home. It's the top 1% of all homes in that price. It's a perfect home. And those homes are always going to sell. They're always going to sell for top dollar. And those are the two. Now, the problem is for 80% of sellers out there whose homes are, let's just say, homogenous, they're boring, replaceable, no emotion to it. Now it's purely and solely the value proposition. Now is the time where we look at the value of the property. When the market's going crazy and everything's emotional, people don't pay attention to the true value of a property. You either buy it or someone else is going to buy it. So get right or get left. So what happens in moments like this is buyers have time, buyers have the patience to do the diligence. So you're seeing some neighborhoods where, yeah, I felt this neighborhood was grossly overvalued, but it was selling. So whatever. Now people are looking around going, why is this home in this neighborhood so expensive when I can buy this home in this neighborhood and it seems to make more sense value-wise? So you're starting to see entire neighborhoods come down in value because they were overheated. There are some neighborhoods that I'm pulling where homes are selling because they've adjusted their values accordingly to what the market value is. So you do have all these homes that are selling and selling for top dollar and doing well because everything else is just sitting. Now, what I was telling people 6 weeks ago, well, 2 months ago, and then a month ago, is we're pretty much there right now. I've been saying we have 2 to 4 weeks. We have 1 to 3 weeks. We're pretty much there now. So what is happening at this very moment, and I'm sure you're seeing it because I'm seeing it, what we're having right now is a moment where we are determining who wants to sell their home and who needs to sell their home.
Exactly what's happening. Yes,
and
exactly.
Fellas, this is everything, because anyone who's been in a down market can tell you from experience. I lived through the housing recession, and I can tell you the people who don't have business sense, the people who are greedy, they get slaughtered. Everyone puffs their chest out. Everyone feels like their home's amazing. They're going to be positive. It's going to go well until they get punched in the face. And then it takes time for sellers to acclimate to the idea that they're not going to get anywhere near what they hoped or wanted to get for their property. So what you're seeing now, right now in the month of August, here's what's going to happen. The sellers that wanted to sell their home and wanted to get a certain price for whatever their reason was, maybe they're moving out of state, maybe they wanted to downsize, who knows? They're going to start pulling those homes off the market, and they're going to wait until next year.
Correct.
And if you have the time to sit this market out, it's probably in your best.
Probably a good idea.
I'd say most likely in most circumstances, just wait for a better market next year.
Probably.
Now, for the rest of the sellers that need to sell their home, you should have listened to me a month ago, but now you're in the thick of it, and now the gig's up. This month in August, every listing agent in the entire valley is going to have a come to Jesus moment with their client.
Yep.
And they're going to have that moment where they're going to say, look, we need to sell this property. If we get too deep into fall and winter, we might be sitting this out until February, and you're going to get slaughtered. So what you're starting to see now are massive, massive price declines. I'm seeing 5% reductions, 10% reductions, a higher end properties that are hundreds of thousands of dollars. I had one that dropped at $2 million like that overnight.
Nice.
So the problem here is, like I said, a lot of people hold on.
Well, there's one more problem. Again, you're all on top of this, but let's just throw the other side, because you said earlier, right, there's two levers, supply and demand. Demand is disappearing, right? The negative headlines have gone parabolic on housing, and the AI threat of layoffs and this and that, all the headlines are negative. So if you're even questioning buying a home now, you're like, I'm going to sit this out. I don't know what's going on in this world. It's crazy. So I love the fact that what I call wish pricing or want to sell, that's leaving. That's cleaning up the inventory. That'll make inventory fall, for heaven's sake. But I'm going to be left with somewhere between motivated and really motivated sellers. So my cheap ass can write prices. I'm this, but I'll say for the audience, I'm writing offers 25% below list price because I don't need every one. I only need one to say yes.
Right. Yeah. And if you have the patience to write 100 offers, eventually you will succeed.
Oh,
yeah. So, and the more time that goes by this year, the more likely you're going to have success rates. 25% that's aggressive, man. Right now, like, I don't know how much success you're finding at the moment, but down the line, what you really, what I've been telling my investors, what I've been telling clients on that end is most people are not going to take a 15%, 20% haircut on an offer. What they're going to do is they're going to start stair-stepping those prices down. And then that's polarizing. You drop it down 5%, 10%, and you still don't have an offer. That's when you really start freaking out. So for a lot of my clients, I'm like, look, this is the price that you want it for, and that's 20% below where they're at today. Like, they're not going to likely take that offer. But what you want to do is you want to pay very close attention to this property. Notice every 2 weeks, they're dropping the price 3%. So let's just wait. Ding. Now we're only 10, 15% off of my goal. They're desperate. They're getting motivated.
This is a process. Again, this is a dance. To be clear, Brian, you know this. I expect no seller to take my first offer at 25% discount. Right. Again, I'm only writing them on properties that are days on market 60 or greater. So I'm not doing a first day listing nonsense. It's stuff that has teeth in it. Right. And again, the seller has a couple of choices. They can take it off the market because it's not selling. They can negotiate with me because, again, I'm not honestly expecting to get 25% off, but I'm starting a negotiation, which may lead to a higher price in seller financing. I'm already working on one of those as an example. Right. The seller, I might actually pay list price, but they're going to give me a 3.5% mortgage. Right. Okay. Right. It's all about payment to me. I don't care about price. So again, this is a game, and the money is made in the follow-up. I have never gotten my first offer accepted. My average is 6 follow-ups. To your point, I will set a reminder every 10 days to write the damn offer again. Right. And then we'll just, magic happens because I am a numbers guy, and I will eventually get a great deal because I know how to hunt for motivated sellers. They're out there, and we're in a buyer's market. Las Vegas is a buyer's market. It hasn't been one for a long time. Wake up, folks.
In 90% of cases, you have all the power as a buyer. I've got 2 sellers right now that I know have to sell. They don't have a choice. They have to sell. And I've been trying to talk to them like, you need to be ahead of the curve, not responding, because the analogy is what sounds like a terrible offer today is a great offer tomorrow. And what happens is you don't want to lower it to this price, but someone else in your neighborhood is going to lower that price, and then you're not special anymore. So you have to undercut them in order to really get attention. So
yeah, it's funny. You sent me you and I were looking at doing a flip in a particular neighborhood. As I recall the price points, we went and saw like 5 houses together. I think at the time they were like 950 to 1.2 kind of listings for these big ass houses. And you sent me a list of these houses. They're selling in the 7s, or at least a similar neighborhood. It's got some stuff in the high 7s.
Yeah, same homes, different neighborhood.
Yeah, different neighborhood.
But that one neighborhood that we were looking at, there's 16 homes for sale, 1 under contract.
Yeah. So what's going to happen in that neighborhood's not that big. It's not 1,000 homes in this neighborhood. It's probably 150 or something. But yeah, you've got 10%. So what's going to happen in a neighborhood like that is somebody's going to cry uncle, and they're going to slash. Yeah, and then everybody's going to have to follow.
1 out of those 15 people desperately needs out. And it's going to come to the point where, what price do you need to break even?
It will. It absolutely will become that conversation.
I've got a seller right now, and that's exactly where we are. Is they didn't listen when I told them to be aggressive. Now they're seeing the light, but the problem is now it's gotten a little bit late in that conversation. So now the conversation is going to, at what price can you walk away? And that's it. Instead of walking away with 10, 20, 30, $40,000, which we could have accomplished from the beginning. But many sellers tell me, and this is the worst way of thinking, I need to walk with this much money. That's great. If you don't need to sell your house, then you do you. But if you need to sell your house, the market doesn't give a rat's ass what you need. The market will dictate the value. And it's really difficult for people who don't have business sense to understand that. And even some people, I mean, I'm seeing flips out there that they got hammered, they got creamed. And rather than take the loss and move on to the next deal and make it up, because right now you could take a loss on a flip, reinvest on a really good purchase, and then come back in spring. But instead, sometimes people can't accept losing one deal.
There's a guy I knew in the last cycle. He only did big flips in the market, like $2 million. But again, this plays. He didn't take one $50K loss, and he lost his entire portfolio and had to go bankrupt.
Yeah.
That one sale, taking a $50K loss, would have made him liquid enough to hold on through the rest of the cycle. He didn't take it for arrogant reason or whatever, and he lost everything. So you're absolutely right. There are I see them. There are flippers out there where they're playing with the prices and they're dropping it like $1,000 a month or whatever. I'm like, you guys are not going to sell this thing. You're freaking your carried interest is going to eat you alive.
I was gonna say, if there's a debt service to that,
woo,
you're in trouble. But again, like I said, some people get it. Some people haven't been through this before. The people who have go, you know what? Put pride aside. Take this little loss. Let's roll this into the next deal. Let's get square that way.
Yeah.
But you know what this all boils down to for your audience, right? All you guys want to know is, how can I capitalize off of what is going on? What you and I discussed before we started recording is this. In my opinion, everyone's got an opinion, but this is my opinion. We've got a good 6-month window coming up. And basically, whether you love Trump, hate Trump, whether you love tariffs or hate tariffs, this isn't a political debate. This is just reality. Is this. Much of what is going to dictate the housing recovery is directly tied to these tariffs. And the reason I say that is this. We all want interest rates to come down. What we really want is we want mortgage rates to come down. And, you know, depending on how astute your individual audience members are, there's a huge difference between the Fed rate and mortgage rates. And so what you guys have to understand is this. I've been saying this for 2 months, and we just saw what happened yesterday. And if you go back 2 months, I've been saying the same thing for 2 months. It was never going to happen, a rate reduction. Right now, I think it's a 50-50 in September, and I'm going to come out and say I don't see it happening in September, and here's why. What's going to happen is this. Jerome Powell, who's the head of the Fed, and let's be honest, there's 12 Fed members. Jerome Powell can't just do whatever he wants to do. There are 12 members in the Fed. The problem is the Fed's job is to balance unemployment and balance inflation, right? We've been able to do a decent job, better than the G7 countries, balancing those things. Okay. We never went into a recession. 3 years ago, every economist said we were going into a recession. Now the problem is this. With the tariffs, to see the effect of the tariffs takes time. There's a delayed reaction because first, whoever the company is has to source their inventory, source their products, turn around, sell the products, and then we find out what the effects are. So GM came out last month, said $1.1 billion write-down due to the tariffs. Smucker's write-down due to tariffs. 2 days ago, Procter & Gamble had their earnings report, and they said that because of the tariffs, they're going to have to raise prices so about 5%, anywhere from 4 to 7% is what they're going to have to raise. So that's your diapers, that's your toothpaste, that's everything that people buy, regardless of class. So what most likely is going to occur is this inflationary effect of the tariffs is not going to be seen until Q3 and Q4 of this year. So the problem that we're seeing is Jerome Powell wants to see what effect these tariffs have on inflation. And we're going to see that effect show up in about another quarter. So once we see that effect, he's not going to be able to bring those rates down. Now, the Fed rate affects the rate at which people get consumer lines of credit. So your car loans, your student loans, your credit cards, that doesn't necessarily really affect mortgages. What affects mortgages is the 10-year treasury bond. Now, the 10-year treasury bond is like the adult in the room. Regardless of what political bullshit is ensuing, the honesty line is the 10-year Treasury bond. If the rest of the world doesn't feel comfortable with what's going on in America, if the Fed is being over politicized, the bond market is going to react accordingly. And the problem is, with all this uncertainty going on, Wall Street likes to know what's going on. So Wall Street is looking forward, not in the moment. They look forward. You saw when the tariff started, boom, the market dropped, and interest rates went up for 10-year Treasury. That's because Wall Street didn't know what the hell was going to happen, and that uncertainty made bonds rise, which means mortgage rates go up. Well, now the market isn't really affected by Trump. They don't really believe that any of this is really truly going to have so much of an effect. So that's why you see it's not really being changed regardless of what he announces, pro or negative with that. But the bond market is keeping everything honest. So most likely we're not going to see any relief this year. Now, Powell is up in May of next year. So I think until we get past this tariff situation, you're not going to see any relief. Just forget about it, which means interest rates are going to remain high for at least 6 months, which there means we're not getting any relief at the time of the year that is the best time of the year to be purchasing, which is really, really, really going to affect these sellers. Now, going into spring of next year, if the tariff situations calm down, Jerome Powell can start bringing down those rates, and the Fed might bring down the rates. Either way around it, everyone knows once he's out, Trump's going to put in someone who is going to be a sycophant, who is going to do whatever he tells him to do, which means rates are going to plummet. So once we get to May of next year, rates are going to start plummeting. That is really going to boost the housing market. So we have this window of time where rates are going to be high, sellers are going to be dying, and real estate tends to be very, very, very emotional. If people believe something is going to occur, then it becomes a self-fulfilling prophecy. So it's only a matter of time before you start really seeing more and more articles about a housing crash. And this inventory is high, sales are at a record low. This is going to be a horrible winter. And I think you're going to see prices start coming down overall. You're not going to see this median price at these record level highs soon. I think give it 2-3 months. So I think, again, you got a 6-month window here to capitalize on the winter, I mean, I hate to be exploitive, but this is business, right? Someone's got to sell, someone's going to buy. There's going to be people that have to sell low, and that's the opportunity over these next 6 months before we get to close to May of next year and before we start seeing those Fed cuts. So,
yeah, I couldn't agree more. Again, we're in a buyer's market. Vegas inventory's doubled, transactions down 40%, but still record prices. That's all about inventory mix. Also, I think inventory's going to start coming off. It's going to provide an opportunity to find motivated sellers. I've been through this cycle before. Most investors have not seen a buyer's market, Brian. Right? The last buyer's market was 2013, maybe 2012, depending on your city.
Yeah.
And, if you got in 10 years ago, you don't know what a buyer's market is. This is it. This is when the headlines go crazy. This is when the sellers, days on market grows. This is where inventory skyrockets to 16 in one neighborhood. If you want that neighborhood, you should start writing disrespectful offers on them, and eventually somebody will break. This is business. It's time to go get great deals, and I'm excited because I've been through a buyer's market before, and I know what to do.
Yeah, and I think it's a pretty quick turnaround. Like I said, this is just
They don't last long.
This is a moment in time because we can already see. You can see that those rates are going to come down next summer. I wouldn't be surprised if rates are down at least a point, if not more. I mean, think about it. I mean, the big
it'll have a 5 handle, I bet. Yeah.
Well, the big tell is going to be how things play out, because again, the one part we can't surmise is what the bond market is going to do. And that's all predicated on how this goes down. If the rates stay high and then Trump throws someone in there and they come in and they lower rates a point in a 3-month span, the bond market might react negatively.
The bond market could go up. This could be a double whammy. It could.
So, keep that in mind. That it is possible that mortgage rates, while interest rates come down, mortgage rates could remain high if it's a little too much over the top. If it's a little more nuanced and a little bit more planned out, then we might have a nice soft low landing. But that's what you guys want to keep an eye on, is keep an eye on that 10-year treasury, keep an eye on what the Fed's doing. And especially once we get through this year, going into spring, Jerome Powell is a lame duck. So he's on his way out. Let's just see if he starts gently lowering those rates, and then another guy comes in, continues the trend, and everything comes smooth. If you start seeing that happen, it's off to the races. But that's what we got to kind of monitor as far as our market is concerned. And the other thing you mentioned earlier, is Vegas itself is struggling a little bit in this moment. Our reaction to the rest of the world, again, I'm not trying to be political, but, tariffs, we wanted to get back at China and we went after the entire world. And whether you agree with that or don't agree with it, it doesn't make a difference. The rest of the world is not exactly thrilled with us at the moment. And so Vegas, which is a place that thrives on international tourism, you have to understand, international tourists spend so much more money than domestic tourists. So everything is down in Vegas right now. Rooms are down. Everything is really being affected. So, look, that does affect the housing market here locally, because that is the largest employer here in Las Vegas, are the hotels and casinos. So if you're used to making X amount in tips and now you're getting 25% of that amount, that's going to hurt your bottom line.
Absolutely. Well, folks, if you are shopping in Vegas or Henderson, he's the guy to go to. Brian, how do they follow you, or how do they reach out?
Easiest way, you can go right to my website, leboluxury.com, LEBO luxury.com, and everything is there, all the contact information. You have links to my videos, and pretty easy to find me.
If you want to see some wild Vegas housing tours, he does an amazing job. I'm always aghast at stuff that I can't afford, but it's fun. Thanks, buddy.
All right. See you guys next time.